The halving.
The halving.
The halving.
And the Bitcoin halving.
So the halving.
The halving. Bitcoin supply halving.
The halving.
The halving.
The halving.
The halving.
The Bitcoin halving is set to occur in April 2024. Historically, this programmatic event has sent the Bitcoin price skyrocketing in the months that follow. Will the same thing happen this time around? Will Bitcoin finally surpass $100,000? How can you benefit if it does? Let's discuss. Most people are familiar with the halving. It's an event that occurs every 4 years in which the amount of new Bitcoin entering circulation via Bitcoin mining is cut in half. Why is this important? Because it means with each halving, the inflation rate of Bitcoin decreases. These halvings will continue to occur every 4 years until the year 2140, at which point no more new Bitcoin will get mined, ever. We know for a fact that the halvings will occur roughly every 4 years because the Bitcoin network constantly recalibrates how difficult it is to mine Bitcoin, ensuring that it takes an average of 10 minutes to mine each new block. So no matter how much computational power is dedicated towards Bitcoin mining, whether it's a single MacBook in someone's garage or thousands of football field-sized data centers across the globe, it will still take an average of 10 minutes to mine each Bitcoin block. The combination of these two mechanisms, the halving and the difficulty adjustment, is what enables the hard cap of 21 million Bitcoin. For the first time ever in human history, we've discovered an asset with an absolutely scarce supply. Unlike other commodities, even if demand for Bitcoin increases, there's nothing anybody can do to create more than the 21 million that is coded in. When demand for gold increases, gold miners dig deeper and find new deposits. When demand for real estate increases, builders build more buildings. When demand for a crop increases, farmers plant more of that crop. But there will never be more than 21 million Bitcoin. The most popular argument against the idea that the halving is a bullish catalyst is that as a greater percent of the Bitcoin supply enters circulation, the new issuance will have a smaller and smaller impact on the total float, and thus, the reward getting cut in half will have less of an impact on the price. However, this may not actually be true. When you look at the circulating supply of Bitcoin, 70% of the total supply has not moved in at least 1 year. This much of the supply being illiquid has never happened before in Bitcoin's history. The amount of Bitcoin supply that is truly available on the market, either because it's on an exchange or the coins have been moved within the past few months, is on a downtrend for the first time ever. During all of the previous cycles, the available supply of Bitcoin was actually increasing, so it's not unreasonable to claim that Bitcoin's scarcity may have not yet been felt by the market up to this point. Of course, supply isn't the only thing affecting price. Let's take a look at demand. During this bear market, the demand from even the smallest users on the network, those with 0.01 to 1 whole Bitcoin, has been so great that they are consistently buying up more supply than the current daily issuance of 900 Bitcoin. Given that these are the most diehard Bitcoin users in the market, they're buying when no one else is, when price is down 70-80%, there's no reason to expect demand to relinquish from these users. So when the daily issuance drops to 450 Bitcoin after the halving, there will almost certainly be a supply shock. Looking at the number of active on-chain users, there are clear spikes in and around the halvings. At this point, it's become almost a self-fulfilling prophecy of sorts. Price has historically ripped after the halving, and so when each new halving occurs, the hype returns once again, market participants buy in anticipation, and that causes the price to start ripping. However, the biggest demand catalyst on the horizon is of course the coming spot ETF. The SEC is on the verge of approving one or all of the Bitcoin spot ETFs from BlackRock, Fidelity, and other financial titans. Their clients having access to buy Bitcoin within their brokerage accounts, just like they would for a stock, is going to open the floodgates to a tremendous amount of capital. Granted, it's not real Bitcoin because it is going to be held with a custodian, but the point still stands. And it's not just the fact that buying Bitcoin will be more accessible that makes the spot ETF such a bullish catalyst. It's also the fact that this effectively gives Bitcoin the stamp of approval from Wall Street. For better or worse, most people aren't going to buy Bitcoin until their financial advisor recommends it. Now that Larry Fink, the CEO of BlackRock, is going on mainstream media outlets and referring to Bitcoin as a flight to quality, Wall Street's sentiment towards Bitcoin is going to be positive for the first time ever. They're finally seeing it for what it is. It's the first absolutely scarce commodity in the history of mankind. It won't take much capital from Wall Street to move the needle on the Bitcoin price. Estimates on total global wealth vary, but we've estimated it to be in the ballpark of around $780 trillion, but some estimates go as high as $900 trillion. Let's do some napkin math with the low-end estimate. Assuming investors allocate merely 0.5% of their portfolios into Bitcoin, a very conservative amount, mind you, you're still looking at $3.9 trillion. This is more than 5 times Bitcoin's current market cap and more than 26 times the market cap of the roughly 4.2 million Bitcoin that are actually available for sale, which we mentioned earlier. Linearly adding the $3.9 trillion to Bitcoin's current market cap would bring the market cap to roughly $4.5 trillion, and the price of each Bitcoin would be around $214,000. But trying to squeeze $3.9 trillion worth of capital into an asset as illiquid as Bitcoin would not result in a linear price increase. It would be exponential. Assuming just a conservative 2x multiplier on that, that would put the price of Bitcoin north of $400,000, giving Bitcoin a total market cap on par with that of gold. You may be thinking to yourself, well, this all sounds great, but how can I benefit from this? One way is to, of course, just buy Bitcoin directly. And that's great, but as the price of Bitcoin continues to soar, you'll receive fewer and fewer BTC with each purchase. A fantastic complement is to buy Bitcoin mining rigs and mine Bitcoin. Because when you're mining Bitcoin, you're simply converting electricity into Bitcoin. As the price of Bitcoin increases, you need to sell fewer and fewer BTC to pay for your electricity, which means you're actually getting more Bitcoin as the price goes up, not less. Now, of course, with the halving quickly approaching, you need to be prepared as a miner to survive the decreased block subsidy. The miners that are going to survive the halving are the ones using the most efficient machines possible with the lowest electricity rate possible. This chart here shows how much it costs a miner in electricity in order to produce 1 Bitcoin. Each of the different lines is for different models of mining rigs, and the x-axis shows a certain electricity rate. Here's what it's going to look like immediately after the halving. As you can see, many miners are above the dotted line, which means they'll be unprofitable. It will cost them more in electricity to produce a Bitcoin than what the price of Bitcoin actually is, assuming Bitcoin is $35,000 at the time of the halving, which at the time of recording is exactly where it is today. When we look at this chart, each dot is size adjusted for how many miners on the network are at that specific electricity rate with the specified machine. As you can see, the majority of the network is comprised of S19 or equivalent machines at 6, 7, and 8 cents per kilowatt hour. At current price and hash rate, all of these miners will become unprofitable after the halving. And keeping in mind the difficulty adjustment, once these miners unplug, difficulty will adjust down and surviving miners will have wider profit margins. We've estimated that difficulty will drop by roughly 25% in the weeks after the halving, and this chart shows what the mining landscape will look like after the less profitable miners capitulate. Mining with the most efficient machines available will give you the best shot to endure the halving and then feast when the bull market arrives. S19 XPs, even at an 8 cent rate, should be able to survive and even thrive when the block subsidy drops to 3.125. Before you go check your latest electrical bill to see what your power rate is, I'm going to save you the trouble and assume it's much higher than 8 cents per kilowatt hour. Thankfully, there's still a way for you to mine Bitcoin. Blockware Solutions allows you to mine at some of the top data centers in the world. The Blockware Marketplace allows you to buy ASICs turnkey. These machines are online right now at top-tier data centers in the United States. As soon as your transaction settles on-chain, ownership of the ASIC is transferred to your name, and the mining rewards are instantly redirected to your Bitcoin wallet. There are hundreds of different ASICs available for sale, including the aforementioned S19 XPs. There have been multiple companies that have done hosted Bitcoin mining the wrong way, which is why Blockware built this platform on the thesis of transparency and minimizing counterparty risk. Click the link in the description, sign up for the marketplace, and start browsing for rigs. This is a free market platform. All of the machines available for sale are listed by existing Blockware customers, and they choose their price. So keep an eye out because you may be able to snag some incredible deals that you won't find anywhere else. If you want to learn more about the halving, what to expect, and how to prepare, then I highly suggest you check out our 2024 halving report. This report goes much more in depth than what we could fit into a 10-minute video. So click the link in the description to read that. Thanks for watching, and make sure to like and subscribe for more Bitcoin content.